the exam to review, which covers chapters 3 and 4. Again, this is going to be worth 100 points, just like the last test. Make sure you have a calculator, and you can have a 3x5 card or sticky note with the formulas for the two ratios, which I'll explain in a few minutes. But again, no demos, no notes, no book, homework, papers, having somebody else take the test for you, that kind of stuff. Again, I'm going to ask all of you to be on your academic honesty and integrity, and please do not cheat on the test by using any outside sources. Just make sure that you are completing the test. You will get 1 hour and 50 minutes or 110 minutes to complete the test. And except for the vocabulary, I'll have to hand grade everything else. The forms that you need will be sent in the email along with the link to this video. And again, I will show you some examples of things to study for the test. The test is going to be on June 1st, and you will have from 12 a.m. to 11:59 p.m. to take the test. So again, please allow yourself that hour and 50 minutes to complete the test. All right, so for the test, there's going to be several things that we're going to be discussing, and there is a review that will be in Canvas for you to have in front of you that will tell you exactly what is on the test, again, just like last test. And again, I will go over some examples. So the first thing I want to talk about is the vocabulary. With the vocabulary, again, it's going to be like the last test. There's 15 vocabulary words. They will be matching the definition to the word. And again, just think about things that you learned in chapters 3 and 4, like adjusting entries, closing entries, profit margin, straight line depreciation, the accounting cycle, temporary accounts, permanent accounts, income summary. Make sure that you are looking back over those assumptions and principles that we had as well, like we did in chapter 1, okay? So again, 15 vocab words, matching those up with the definition. The second part of the test, you're going to calculate adjustments for 4 scenarios. So what I'm going to do is I'm going to give you 4 scenarios. Think about the most popular expenses or adjustments that we've been working with. And with that, then you will be given those. So let's say for an example, and I'll give you one here, a good one to study, to look over for this one is going to be one of the exercises that you did in chapter 3. This is exercise 3.6, and this does cover one of each of the most used adjusting entries. So know how to calculate out depreciation, the insurance, the supplies, the unearned revenue, and possibly like rent. So for an example, for the depreciation, if you have the depreciation adjustment for the test, you will take the cost of the item, the long-term asset or bigger asset, and then you take away its salvage value, divide by its useful life, and that's going to be 1 year's depreciation. So that will be depreciation expense and accumulated depreciation. For your insurance, you want to figure out what has expired or been used up. So what you're going to do is you'll take the amount of the insurance balance, what is left over, subtract that out, and then the difference is what you used up. That's insurance expense and prepaid insurance. Another popular adjustment is for supplies. We have supplies that we have purchased during the year and then what we've used up during the year. So you'll take the beginning balance of your supplies, you will subtract what is left over, and the difference is what we've used up, and that will be your adjusting entry. And so that's supplies expense and supplies. If you do have a revenue where, remember, we get the money ahead of time, but we have not yet provided the service, so we can't recognize the expense until we actually, or recognize the revenue until we actually provide the service. So for an example of that, I just had my lawn fertilized today. I pay for the whole year at once, and they do 7 treatments. So I've had 2 treatments done already, so they can recognize the revenue for those 2 items. So that original transaction goes to cash debit and unearned revenue credit. When we recognize the revenue, we take it out of the unearned revenue and credit the revenue. So you debit the unearned and credit the revenue. So again, that's one of those other ones. Rent, if you prepay your rent for the year, and let's say for 12 months, you would divide it by 12. Each month is 1 month's rent. And then whatever your adjustment would use, then you would use that number. So if it was 3 months, you'd multiply by 3 and so on. So that's rent expense and prepaid rent. So you'll calculate out the adjustments for those scenarios first. So that's going to be your first part of the test. Then you will journalize the adjustments using those numbers. So again, if there's depreciation, you'll use depreciation expense and accumulated depreciation. If there's insurance, insurance expense and prepaid insurance. If there's supplies, supplies expense and supplies. If there is one with wages, I skipped over wages. That would be wages expense and wages payable. Let me dig up another one for that one. Like here's exercise 3.6. So here's your wages expense and your wages payable for wages that were earned but not yet paid. And then you'll look to see how many days or how many employees you have, and then figure out what that pay is going to be. Again, wages expense and wages payable. For that one, again, we also did exercise 3.7, and that was the wages expense and wages payable. That was 5 workers at $250 per day, and that's $1,250 for the wages expense and the wages payable. All right, and then if you do have a revenue one, just take what the revenue would be and then divide it by how many times the revenue, like for example, if you have your lawn fertilized, so whatever the amount is, let's say that is $3,500 divided by 7, then it would be $500 each time. 2 times have passed, so it would be $1,000 for the adjusting entry. And again, you use the 2 titles, use your unearned revenue and your revenue. So calculate your adjusting entry first, and then you're going to journalize that as well. So again, look at exercise 3.6, 3.7. I'm sorry, 3.6 and 3.7 went together. I'm sorry. So here's exercise 3.6, A through E. F was up here at the top. And then you had exercise 3.7 again with the wages. All right, then you're going to prepare a classified year-end balance sheet from adjusted trial balance. So I will give you an adjusted trial balance, and you're going to prepare a classified year-end balance sheet. Now, remember that your balance sheet is assets equal liabilities plus equity. And so that's all still going to be true. But what we do with the classified balance sheet is that we take our assets and we break them down into current and long-term or plant assets. And then we take our current liabilities and separate those from the long-term liabilities. And then the equity is just the equity, just like you've done before. So current assets could be cash, accounts receivable, supplies. It could be prepaid insurance, prepaid rent. Those items would be current assets. Plant assets are going to be those more long-term assets. So trucks, vehicles, buildings, land, and so on. Current liabilities, those are going to be accounts payable, interest payable, wages payable, anything that we can pay off within 90 days or less. And then our long-term note payable is going to take us longer than 90 days to pay. So here's one for the Wilson Trucking Company that we did for exercise 4.11. Name of the company, don't change the title, it's still a balance sheet, and then the specific date. Then you list your current assets and those items that are current assets, plant assets with their accumulated depreciation. You'll total up your current liabilities first and then your plant assets, and then total up your total assets. For your liabilities, you will list those current liabilities first, then a long term. First total up your current and then total up your total liabilities, and then your capital, that comes from your owner's equity statement. You'll be given that for the test, and then you just add in your equity section with your capital. Remember to calculate capital, it's just like the ledger. We take the beginning balance plus any net income or investments minus withdrawals, and that gives us our equity. So you list the name of the owner and then total that up with your current and long-term liabilities to get assets equaling liabilities plus equity. So again, don't change the name of the balance sheet. It's still a balance sheet. It's just the format of how we do that. So we don't change the title. So again, look at 411. You had a couple others that you did as well with your B problems or your A problems that you could do the B problems, like for 4A, you did the tie bolt construction. You could do the B problem for that. So again, just practice that classified balance sheet. Then you are going to prepare some closing entries from an adjusted trial balance. I'll give you another adjusted trial balance and you will prepare your closing entries. Remember, read, close out revenue, close out expenses, post the net income to the owner, and then close out the withdrawals. With that, remember that those are our temporary accounts and those are what we close to get ready for the next fiscal period. So with closing entries, this is exercise 407. You did a lot of these during the chapter. You're going to start out with your revenue. So remember the normal balance side of revenue is credit. So to close it out, we have to list it as a debit. And then income summary helps us to balance out our debits and credits. All of our expenses are normally debit balances. So to close them, we're going to list them as credits, total that up, and that's our income summary to help balance out the debits and credits. Remember, if you do not have the profit, you take revenue minus expenses, and that will give you the profit, income summary debit, capital credit, because we want to put that money in with the capital, the profit that the owner makes. Remember, we don't want to use the capital balance because we don't want to close out capital because then that means we're going out of business, so we don't want to do that. The fourth entry, we're going to close out withdrawals or drawing. So we debit capital and we credit the withdrawals. Normally our withdrawal account is a debit balance, so to close it out, we put it as a credit, and then we'll take that away from capital. Now, if you have to calculate out what your capital balance would be after your closing entries, if you don't have a ledger, again, you're going to take your beginning capital balance, add your profit or investments, subtract your withdrawals, and then that will give you your ending balance for capital. So that's something to think about. You'll write up your closing entries using REID. Make sure you know the titles and the order that they go in. They have to be in the correct order, REID, and then know how to calculate out the capital balance. Now, the two ratios that you're going to have are profit margin and current ratio. And for both of those, we did some different exercises and quick studies. So I'm just going to show you the profit margin ratio for exercise 318 from chapter 3. And we'll go over that one in a second here. For that one, the formula is in your book. It's on page 100. It's net income divided by net sales. Net income divided by net sales. So for 318, we take our net income and divide it by our net sales. And there was 5 different companies here. And then you calculate out what their profit margin is. So this is how many cents per dollar that they earn in income for every dollar in sales. So the highest one here is letter C, because they had 43.3 cents in net income for every dollar in net sales. So again, that's net income divided by net sales. For the for the current ratio in chapter 4, that is where we need to look at our classified balance sheet to get our current assets and our current liability totals. So our total current assets and our total current liabilities, not total assets, not total liabilities, just current assets and current liabilities. So that formula is on page 139. And again, you had another couple things that you did work on with that to practice. So you had exercise 415, and this was some different companies here. And then again, you take the current assets and divide it by the current liabilities, and then that gives you their current ratio. And that's for every dollar in current debt the company has, that it assesses their ability to pay their current debt. So the one that you want here is the highest number, and that's Edison. with 2.47, so they have $2.47 of current assets for every dollar of current liabilities. Again, you want that to be over 1, because if you notice here, Chatter and Gleason, they are below 1, so they don't have enough to cover their current liabilities. So the one thing that I don't remember if I mentioned this in the video for chapter 4 demo, but you want to make sure that you don't have too high of a current ratio, because then that means that the company might be hoarding cash, and that could be better spent on other current assets, like if your people need to be paid, or your building needs repair, or your machinery is down more than it's up. Maybe you need to invest some of your assets into that. So again, you want to be about 1.5 to 2 to 1.5 to 2, but you don't want to be too high, because again, that can look like you're carrying too much in current assets. So that doesn't look good. Remember, the public can pull your financials, and they can look at those items, and employees might do that, or companies that do have those financials out there that are a public company. People look at that to invest their stocks as well, invest in their stocks. So this test it's not as much as the last test, but you want to make sure that you really concentrate on those closing entries, that classified balance sheet, and those adjusting entries. Those are going to be the big parts of this test. So if you have questions after you're going over the review, please let me know. Again, June 1st is the date to take that test. Please, again, refer to your schedule, and the Canvas schedule or calendar will have it there as well. That ends our exam review for exam 2.